In today's video, I'm going to talk about 5 important points which is very important to consider before you file your income tax return as an NRI. It's very important to ensure that your returns are error-free, accepted by income tax department, and you don't receive any notices and all. So if you are as an NRI planning to file your income tax return this year, so please watch this video and all the 5 points and ensure that either you or your CA or whoever is filing your return should look into these 5 important points. I want to again tell you that 90% of notices comes due to not following these 5 checkpoints. So in this video, I'm going to talk about these 5 important checkpoints which every NRI should consider, should check before filing their income tax return. So let's begin. So hello friend, my name is Arun Tiwari and generally I make video on international taxation, NRI taxation, tax litigation, all those points. And if you are an NRI and you are looking to file your income tax return this year, in last video already I spoken about what are the circumstances under which it's mandatory to file your income tax return. And if you have not watched this video, then you can watch it here. And in this video, I'm going to talk about 5 important points you should consider. Now let's start. So first point, you have to consider your all source of income, which is here in India. I have seen generally what happens, people just look at the bank statement and whatever is there, they just take it. Sometimes what happens, some income which is not reflected in the bank statement, but it may reflect somewhere else, that has to be considered. For example, if you are receiving interest on FD, which is suppose a 5 years FD, so that FD interest will not show in your bank account, but the interest already got accrued, so that interest has to be included. Sometime I have seen that people receive rent and all, but they receive in say some other account or maybe their spouse account or parents account, and they forget to include that. So understand, if the property belongs to you, the income also belongs to you, whether you receive in your account or some other's account. So you always consider all sorts of income to be included in your IT return if you really want your IT return perfect and you don't want that income tax come back to you. Now I just want to remind, for NRI cases, the income tax come back up to 16 years to haunt you. So always ensure, if you're filing income tax return, it's perfectly fine, and even it means paying slightly more taxes, it's fine if the income tax return is perfect, because the peace of mind is very important than saving some tax. Second important part, in most of NRI cases, especially those who are working on ship as a sailor, as a seafarer, I have seen they generally invest their money on the name of their spouses. Sometimes they buy houses on the name of spouses, right? And if you are also doing that, like you are abroad and your spouse is here and you are channeling everything through your spouse, then consider this point very important. If it's your income and you are channeling or investing through your spouse without making a proper gift deed, and the gift deed should be irreversible gift, in that case that is your income and that has to be clubbed with you. So all the income which is coming through your sources invested on the name of your spouse or parents or children, you have to add those income in your name. It is called clubbing provision under section 64. So always tell this your CA that this is my income, although just for the management or easy way of managing these things, I'm transferring all this money to my wife account or spouse account, and she is doing FDs or she is buying stocks or she got houses, but actually the fund is flowing through me, through my foreign income. So always he will include that income into your account, not on your spouse account. Lots of people will tell you that nobody will know, but the question is, what if somebody knows? So there is no point, because anyhow, if you are an NRI, your income slab and your wife income slab is almost maybe same. So you are not saving any taxes by doing that. Only you are creating a complications. So anytime in future, income tax officials may call upon you or your wife, and they may ask you or your spouse that what is the source of income, and then when she will tell or he will tell that this income belongs to you, then basically it has to be clubbed back with you, and then you have to go through all this hassles. So always ensure all the incomes are clubbed with you if the income is coming from you. Third important point, if you are investing something on the name of minor children, your minor children, then the income should be clubbed with the parent who has the highest income. Is very important. Most of the time I have seen the people buy some FDs, they open some bank account on children's name, they do some saving on their name, and the some interest is coming up, and they are not bothered to report that because it is more than 2.5 lakhs. So most of people will say, okay, it's not required. But understand, if the children are like minor, then their income has to be added with the parent who has the highest income or who is in highest income slab. So you always consider to adding that whatever income your children are generating through the fund given by you. Now there is one way to avoid this. You can create a family trust, and then through family trust you can invest money for the benefit of your children. So when your children will become 18 years major, then they will get all the money, and between that period the money will not club to you. So if you want, you can make a family trust. If you want to know more about that, you can put as a comment. Either me or my team will come back and tell you more about what is the family trust and how it can be used for the benefit of children and for purpose of tax planning also. Now, fourth important point here I'm going to tell you that you have to check your 26 AS, AIS and PIS. Now, these are three documents which your CA or whoever is preparing your IT return should check, must check, because what happens sometime some income you will miss out which is already reported. Now understand, these 26 AS, AIS and other document, this is document prepared or gathered by income tax department through different sources like from your bank, from your broker, from registrar. So they already have this information. Now if you don't verify that, the problem is there will be mismatch between income reported by you and income showing in this reports. So always cross verify these three documents. And as I told you, maybe you have earned income on as a FD return, but because a 5-year FD, so you don't know how much interest is accrued. You can check this document and you will come to know how much interest is actually accrued, and you can add those interest in your income tax so that your income tax return is perfect as compared to those data which is already available with the income tax department. If you have some issue with that data, of course you can file a grievance there to rectify that data, because sometimes what happen, they double count the same income, and of course you have to rectify. So always in advance you provide documents to your CA so that he can check all these things, and if there is any problem he can reply, he can raise a grievance on your behalf so that those issues is well rectified before you file your income tax return. So suppose if you're an NRI and you're looking to file your income tax return, you can reach out to us also, because we follow all these steps before filing income tax return. For us, filing a proper income tax return is more important than filing too many returns. Now, fifth important point is you have to choose right income tax form. Now, very important point, if you choose wrong income tax form, your income tax return will be rejected. It will be considered like you have never filed income tax return, and the department can levy penalty of non-filing the return, and they can ask you to file belated return with right form. Now, issue with belated return, if there is any loss which you are carrying forward, you will not be allowed to carry forward. So if I just want to tell you simple way, see, if you have just basic income, then ITR 1, ITR 2 will be sufficient. If you have like capital gain, then you have to may go to ITR 3. But again, these all things depends on kind of income you have. So I cannot just give you a rule. Basically, you have to definitely approach somebody who is filing the return and provide all the information. After checking the information, they will be able to tell you the right income tax return. Now, lots of time people say, can I file my income tax return myself? The answer is yes. Why not? If you have that level of knowledge, experience, and you are into that like kind of profession, like you are yourself a CA or maybe a finance professional, you're doing for other people, you can definitely do. But understand, if you are not doing it on a regular basis and this is not your profession, so taking chances and filing wrong return is not a right idea. Better idea is that instead of breaking your head, you can focus that time to earn or to learn something more, and you can simply outsource this to somebody who is already doing that. So that's all in this video, friends. 5 points I already told you. So if you're filing your income tax return or yourself or through somebody else, just bring into that their notice that they have to check all these important points before uploading their income tax return, so that your return is processed properly. If there is a refund comes to you properly without any hassles, and there should not be at least a chance of getting notice for misreporting or not reporting something or reporting your return in a wrong income tax form. That's all in this video. Thank you. Have a nice day.